Hello and welcome to You Files Your Taxes Your Way podcast. My name is Ida Celli. I'm your host for today, and we're going to have Gerry Viteratus talk with us regarding our subject today, which will be for students anything that's related to their taxes. So, hi Gerry, how are you?
Good, Ida. How's everything?
Everything's good. So we have a very good topic today. It's geared to all the students out there and how taxes affect them.
Yeah. So what are let's put it this way. What are the tax goodies that the government gives if you're a student, right? That's essentially what we're going to talk about today. Let's start. Let's
Let's
see.
start
What's
with how about the tuition tax credit?
Okay, so tuition tax credit is the standard one, right? That's the
Hmm.
basic one. So that's a non-refundable tax credit, okay, that the government gives for the tuition fees you've actually paid during the year. Okay, so by non-refundable, what we mean in this case as a non-refundable credit, what we mean is the you cannot claim the excess credit that is above your federal tax, meaning that if you have more credits than tax to pay, then the difference unfortunately cannot be claimed as a refund. That's why the government calls it non-refundable. However, the good news for tuition is if you are in that scenario, which is quite common, let's not kid ourselves. Students who are full-time students in a post-secondary institution, usually they're not going to be that taxable, or they're not going to pay that much tax on their return, regardless of whether they have tuition fee credit or not, right? So for those individuals, they are likely to have an excess amount of tuition that they don't need to reduce their tax to zero. So what happens in that case is the excess amount can be banked, meaning that I can do what we call in tax circles a carry forward, okay, of the credit. But I have a choice, okay? If I've got more credit, meaning the actual tuition credit that I can claim, if I've got more credit than what I need to reduce my tax to zero, then I have two options presented in front of me. I can either bank it and carry it forward to the following year, or I could take that excess amount and give it to my parents if my parents are helping me with my tuition. Now, this is up to the student to decide whether they are transferring this to their parents or whether they are carrying it forward to a future year. Now, the tuition fees themselves are quite high. They're getting higher as the years go by. But let's not get too enamored with the credit itself, because the credit itself is not that high. Okay, the credit itself, the way it works is the amount that you can actually claim as a credit is your tuition fee multiplied by the non-refundable tax credit rate, which is 15%, 15%, meaning that what you're actually claiming as a credit to reduce your taxes is 15% of the tuition fees that you've actually paid. Now, which tuition fees are eligible in this case? Okay, the government considers eligible tuition fees any fees that you paid to go to a school that the government considers as a post-secondary educational institution, and has to be recognized by the government as that. What that means, okay, in English in this case, okay, what that means is university, college, or a trade school, for example. Okay, that's what it means to the CRA.
Okay, you mentioned we're allowed to transfer a portion to our parents. Is there a maximum?
Yes, very good question. Very good question there, Ida. Yes, so as I mentioned, if I've got more credit than tax that I have to pay, then the excess amount, I can either, as I mentioned, carry it forward. I bank it, in other words, and I carry it forward, or I transfer it to my parents. In this case, what happens is I am capped at $5,000. And remember, it's the excess I'm transferring. I can't choose to take the full tuition fees and transfer them over. As a first step, I have to use them against my tax owing. And then if there's an excess amount, that's the amount that I could transfer to my parents. And that excess amount is capped at $5,000.
Okay, what if the parents' situation changed this year and the student had a carry forward, a decent carry forward last year? Can he use that for the $5,000 limit that they give to the parents?
So the answer, unfortunately, is no. The moment you've made the choice of carrying forward the credit, you can no longer transfer it back to your parents later on. Okay, so you really have to decide wisely. Okay, when you have these tuition fees, you are either going to bank them and you keep them for yourself and you reduce your tax owing in the future. Okay, in future tax returns, or in the year that you've incurred those expenses, you are going to transfer that excess amount to your parents. So the simple answer there is the only amounts that you can transfer to your parents are the current year tuition fees. The moment they're carried forward and you made that decision, too late, you can't go back at that point.
Very good to know. So now let's move on to the Canada Training Credit.
So that's a newbie. Okay, so the Canada Training Credit is a new kid on the block. Okay, when it comes to tax credits, it was introduced in 2020. Okay, and the Canada Training Credit is now the difference with the Canada Training Credit is there are a few differences, but the major difference is that the Canada Training Credit is a refundable tax credit, unlike what I just explained before with the tuition tax credit, which is non-refundable. What does that mean? It means that if I've got more credit than tax owing, the excess amount now is right in my pocket. The government's going to give it to me in cash because it is a refundable credit in this case. So any excess credits I have above my federal tax becomes a refund in this case. So that's the good news when it comes to Canada Training Credit. Now, how does it work? How does the Canada Training Credit work? Well, first, you have to meet certain criteria. The first criteria is you have to have what they call a Canada Training Credit limit. So you have to start accumulating a Canada Training Credit limit. Now, how do you accumulate this limit? Okay, and it's a cumulative limit, by the way. So if you don't use it, it just accumulates up to a maximum amount of $5,000 lifetime. Okay, so how do you start accumulating it? It's very simple. First, you have to be 26 years old and over. That's number one. Number two, you have to have at the very least just about a little over $10,000 of what the government considers as earned income. Okay, meaning that this is income that you worked for. This is a job or you were self-employed, for example, and you got it. I think the only exception to that rule is that you are maternity and paternity benefits are included in earned income. So the government will consider that. Okay, well, we'll include that. But otherwise, it is limited to that. You also have to be a resident throughout the taxation year. Now, the limit, you start accumulating it based on the prior year, meaning that the moment you meet those conditions in the previous year, you've just accumulated $250 for the following year. Okay. And the moment you meet the criteria that I just mentioned right now, which by the way, the detailed criteria is found in the blog article that we have on our website, which we'll post the link. We'll post a link to it in the description of the podcast. Okay. The moment you've met that criteria, you get $250 per year that accumulates, which means if you haven't used it yet, as of right now, you've got $500 worth of limit if you've met that criteria.
So you don't have to actually be in school to be eligible for that ceiling that you accumulate. Okay.
You're absolutely right. Yeah, to accumulate the limit, I don't need to be in school. Okay, I don't need to actually be in a post-secondary educational institution. I don't need to be in a university, for example, taking courses. Okay, but to claim the credit, of course, I do need to, obviously, But in the meantime, if I'm planning on going back to school, okay, but I'm not going to do it in 2 years. In the meantime, I'm accumulating a limit as long as I'm over 26, and I'm 26 and over, excuse me, and I'm making earned income, meaning I'm working and I'm making more than $10,000 of earned income. Now, the year you go to school, okay, and you go to and you and you've got these tuition fees, now the credit itself will be the lesser of half of your tuition fees for the year, or the limit, the Canada Training Credit limit you've accumulated up to that point, up to the point when you're filing your return. Okay, it's going to be the lesser of the two, and that becomes a refundable credit on your return. And like I said, you're getting it cash. Okay, so in other words, let's say you're not taxable at all. Let's say you're not paying any income tax at all, any federal tax. The government will literally give you a refund of $250 or $500, depending on how much limit you've accumulated up until that point. So really, it's a nice credit that the government has added, especially, and you can see that it's targeted towards individuals that are trying to get to go, they're trying to better themselves essentially. They're going back to school because they want to improve their skill set. Okay, that's who it's really targeted to.
Okay. Now, student loan interest credit.
Yes. So if you've taken out student loans, okay, to study, And the moment you start reimbursing that student loan, any interest that you have reimbursed, okay, with that student loan that you paid becomes eligible for a credit. Okay, very similar to tuition tax credit. It is a non-refundable tax credit in this case. So again, any excess amount that you have, you bank and you can carry it forward for 5 years. Okay, when it comes to your student loan interest. So if you don't need it to reduce your federal tax to zero, then you simply carry it forward to a future year, and you can carry forward up to 5 years. Now, the credit rate itself is 15%, just like the tuition tax credit. So you basically take the interest that you reimbursed, that you paid during the year, in other words, and you take 15% of that. That becomes your student loan tax credit.
Okay, so what about the loan repayment itself? Is that tax deductible?
No, it is not. No, no. The loan itself is not, because that would have been an amount you would have paid out of pocket anyways, right? That's the whole point. What is the excess amount you're paying is the interest because you borrowed off of that amount. So the principal of the loan, unfortunately, is not deductible. Nowhere on the tax return. Essentially, I can't claim it as a deduction or a credit. The only thing I can claim is the interest that I paid on that loan during the year.
Okay, and what about the students that instead of studying in their own province, they're attending a university in a different province? Um, they have to move to get closer to the university. Are any of those expenses deductible?
They can be. Okay, it's just like, the cheesy joke I always say is that the answer to every tax question is it depends, right?
Hmm.
That's always the answer in this case. It can be under certain conditions. Okay, so first condition is you had to have gotten at least 40 kilometers closer to the university, okay, or the school that you're going to, that's an eligible post-secondary school, in order to study. That's number one. So you moved and it brought you 40 kilometers, at least 40 kilometers closer to the school that you're going to. That's number one. However, to deduct now the moving expenses themselves you could actually deduct is essentially all your costs of moving. So if you rent a truck to move your things, that's eligible. Any meals you take along the way during your trip between your home and the school, that's also eligible. Anything that is applicable under what we call moving expenses, okay, you can deduct. So like I said, the cost of traveling, the cost of moving, and so on, anything that relates to those costs are eligible as a moving expense. The catch is, though, that you could only claim it against scholarship or bursary income. Okay, that's the catch. Okay, is that if you're moving purely, if your sole reason for moving is to go to school, okay, even if you meet the 40 kilometers closer provision, okay, you still need some sort of income, meaning that you could only apply those expenses again, renting a truck, renting a mover, paying for a mover, in other words, any expenses that comes to the trip. So for example, gasoline for your car, meals along the way, and so on. These are all eligible. These all become deductible. It's a deduction on your tax return, meaning you're reducing your taxable income by the amount of those expenses. Okay, but again, you could only claim them if you've got scholarship income. Now, the government does offer a certain leeway, okay, and I did some research on it, which I again, and I provide that info in the blog article. The leeway is if you're moving and you're moving for a job at the same time. So in other words, you're going to school and you found work at the same time in that city where the university is. Then what you can do is you can apply the moving expenses against your employment income in that case, because moving expenses I can claim under two conditions. Either I'm moving because I found another job or because I'm going to another school. So so if you found a job where you're going, okay, and then in that case you could make the justification that you're moving because of a job, and at that point you could apply those expenses against your employment income in that case, meaning that you can't claim more expenses than your employment income. You're capped at whatever employment income you made when you moved. Okay, as of the moment that you moved till the end of the year. Okay, that's essentially what the government allows. But if your sole purpose was to study, and you didn't get a job over there, then you need scholarship income, and you could apply the expenses against, and again you're capped up until the amount of scholarship income that you made.
Now we went over the expenses. Now let's take a quick look at the income, scholarships and bursary.
So right in the topic,
Right
right? I mean,
into it.
it just flows right into it. So
Just right.
scholarship and bursaries. So that is so that's an important topic there, because this is essentially free money that on on the tax side that the government provides. Now, the scholarship could come from anywhere, right? You could apply for any scholarship under whatever department that you're studying in. The key point here for scholarship income is apply to anyone that you would be remotely eligible for. And the reason why I say that is because scholarship income, if you're a full-time student, is tax exempt on your tax return. So you don't declare the income at all on your tax return. Okay, that's the good news. Okay, and now even if you're a part-time student, you can still claim a $500 deduction and expend and certain expenses like your textbook expenses against that income, even if you're not a full-time student. But the government gives a huge leeway when it comes to scholarship income. The criteria to make the income exempt is simply you have to be a full-time student either this year, last year, or the following year. Okay. So for example, when you're filing your tax return in 2021, if you're a part-time student in 2021, but right now in 2022, you're a full-time student, that 2021 scholarship becomes exempt because you meet the 3-year rule, which is either the previous year, the current year, or the following year. As long as you're a full-time student in any one of those years, that income is fully exempt. So the message I want to give to everybody is it's a no-brainer. Apply everywhere. The worst you will get is a letter that says no. The best you will get is free money. Literally, you will not pay a cent of tax on that income if you're a full-time student.
Okay, but you still need to report it on your tax return, right?
Yes. Well, again, it won't show up on your tax return. You declare it. So, for
Mhm.
example, in a program like UFile, you would declare it, and UFile would determine it at that point if it's fully exempt or not. Okay, UFile would actually determine that in that case. Okay, so you would still plug it in. You're still going to get a slip from from the provider of the scholarship, which is T4A Bucks 105, but on the actual return, you don't see it. It's not included at all in the other income line, as we call it, which is line 13,000. Okay, you won't see it at all in there. It is completely exempt.
Okay.
Excuse me.
All right. Anything else you'd like to add or remind the students?
So what I want to remind is again, when it comes to scholarship income, I want to really stress that point. Free money,
Mhm.
everybody. Free money. Okay. So make sure you do it. The other thing you have to be mindful of is to check your carry forwards. I can't stress this enough when it comes to students. A lot of students don't realize that they have all these carry forwards that are banked. Okay. So make sure that you're applying those carry forwards.
Where
Okay.
would they find them?
So the tuition carry forwards, you would find them in two places. Either you go to your My Account portal of the CRA, which is child's play to sign up for. Okay, so My Account is basically your web portal to the CRA. It's your whole tax profile with the CRA, and you get all your carry forwards there and all your notice of assessments, and including your TFSA room and limit. People forget that that's the only place you can get your TFSA room and limit is the My Account CRA portal. Okay, so that's crucially important there. Okay, and then from there, the other place they can find it is their notice of assessment. Okay, so once they get assessed by the government, you get a letter which essentially indicates the confirmation of your return. Okay, so the government shows you what you declared and what they agree with or disagree with. If they agree with everything, then everything's fine. If they disagree with, you got a reassessment at that point, and on that one, you will see your well, actually two things actually in this case. You will see first of all your tuition fee credit carry forward and your Canada training credit limit. You'll see that as well. Actually, you'll see that as well. So include and in My Account portal, you'll also see your Canada training credit limit as well. Because remember, you're accumulating this. Even if you're not using it, you're accumulating it. And the day you decide to go back to school to improve your skill set, now you've got a nice refundable tax credit waiting for you.
Interesting. So, I think this pretty much concludes the podcast. I'd like to remind everybody that you can find our blogs on ufile.ca, as well as a lot of other information. You can follow our podcast also there. There's a Tax and You page where we give some tax tips, as well as some YouTube videos that are available to you. So, any wise words, Gerry, before we sign off?
No, just exactly what you mentioned. The article, what the topic of the article, the podcast we're talking about today is in a blog article that we've written on the site. We're gonna post the link in the description, whether you're listening to us or whether you're watching this on YouTube. You're gonna have all the information there. Do not hesitate to go to our website. We have a bunch of information that you related to taxes in general that will help you be more efficient with your taxes.
All right. So thank you very much, Gerry. Uh, Thank you, everybody, for listening, and we'll see you next time.
Right?
Thank you.
Thank you.